What's going on, everyone? Wanted to do a recap of my January 2020 trading. I wanted to do another video because I now got the monthly, the summary that Interactive Brokers gives you after the month is over. So they take about a day to put it out. I figured I'd put it out now because it's a little bit more clear, and then quickly go over the trades that I took, and we'll do all that good stuff. So just get straight into it. The summary, January 1, 2020 to January 31, right here. I ended up making $3,649.96. Majority of that came from Tesla. Now, within the same time period, I also made a $2,000 deposit, like I mentioned before, because I'm trying to grow this account. I want to get it past the PDT as fast as I possibly can. So I have the freedom to be able to trade shares and options when I want to. $4.50 did come out because Interactive Brokers does charge for market data. So it's cheap, but it's definitely not free. So I'll go over this one more time. And I did get some questions before. When I'm trading, whether it be calls or puts, and I'm trading them naked, so just directional calls and puts, I am choosing the next closest strike out of the money. So the strike is pretty close to where the stock is trading. And even though the options don't move tick for tick, they will move a lot. And especially when you're trading big names like Tesla that have massive daily range. So this is that, just to go over that real quick. And then here is the trading stats. So this is my own little personal sheet that I put together just to go over the day-to-day. And I ended up, there were 5 days where I didn't trade. And here's the stats of the month. So I ended up taking 20 trades. 13 of them were winners, 7 were losers. So win rate of 65%. The average winner was $351, and the average loser was $130. Some of those losers were the last week I got a little chopped up, but some of the losers were flat, right? And just with the additional commissions of being a couple bucks, it brought me in the red. So really a couple were, technically I lost money, so I put it as a loser, but they were just break-even trades. When it didn't work out, I got out relatively quickly. So that's that. Now I take a screenshot. So I journal my trades by taking a screenshot of the trade after the fact, and I throw it in a folder so I can have it to review it myself, and I will bring those in and out just to see what it looks like and the setups that I'm usually trading. So we'll do that right now. I typically like 1 minute, 3 minute, and 5 minute opening range breaks in the direction of the gap with momentum behind it. So not just because something is gapping. I focus on just the big names, so Microsoft, Facebook, Nvidia, Apple, Netflix, Tesla, Amazon. And I like when, they're kind of in a channel on the daily and then they gap in a, above or below it. I expect some momentum to continue. But also, we're in a really strong bull market. So I've been way more long biased, and I wait for some consolidation, and when things gap up, I expect there to be an initial move off the open. Whether or not they keep going after that, I have no idea. And also, when a name like Tesla just catches momentum because of the craziness of it, I just try to ride it. So on the 2nd, right, January 2nd, Apple, and I was a little antsy because this was after the New Year's break. So was off for a handful of days, came back, was pretty excited that trading was back on. And this is a great setup, right? This is exactly what I look for, kind of the opening range break. 1, 2, 3 1-minute candles, kind of pulled in a bit, starts to make its way higher, anticipate the break of the high. I didn't even give this a chance to work out. I just clicked the sell button almost instantaneously for a small gain. And then I just kind of checked my emotions and realized, all right, moving forward, I got to be a little bit more patient. I typically take quick moves anyways, but this one was extremely quick. So nice opening range break. I try to risk off the candle low that I get in on if it's far away. And if I'm close to the low of day, try to risk off low a day. And it was a nice move. So that was the 2nd. The 3rd, I ended up trading Tesla. So I made the $37 on Apple, which still green, so I can't complain. And Tesla. So kind of similar looking pattern. Gaps up. Tesla's had momentum the whole past month and a half. Now I jot some levels, and I usually have the pre-market highs and lows as a blue line on my chart. And then now I start with the daily, the 30, the 5-minute, and then I look at the 1 when the market opens. And the 1, I'm just looking for a really good entry, and I have those higher time frame levels marked on the chart, so that way I have a good feel for what could possibly happen. So 2 1-minute candles, right? Close red, moves down a little bit, and then the moment this thing starts to move higher, I went long. So opening range break, it's a 3-minute opening range break, and I was in the money pretty quickly, and this moved about 2-3 points very fast, and I got out. I typically like to, once I'm in the money, and it's not as easy to do with options, but it's something that I try to do once I'm up pretty fast, is don't let that trade go red, right? And I know pullbacks, even when stocks have made a move a lot farther than your entry on the chart with options, you pull back, the option can kind of dump a bit. But my thing is, once I'm up, try to not let that go red, because that's where I've let some losers prior. Like, that's a way from saving me from myself. I've let some losers happen because I'll be up and I had a chance to get out break even, and then I kind of emotions take over a little bit and I'll let something get a little nasty. I've gotten better just because I think with experience you get better, but that's something that I do, that I try to do to my best. So that was a nice trade. $580, super fast. I was in the trade for kind of a funny amount of time. 1-6, no trades. 1-7, ended up trading Tesla again. Took a loss on it. So I was going for the opening range break. It did not work, right? This kind of strategy does not work every single time. Big 1-minute candle closes red, starts to creep its way back up. I was trying to anticipate the break of the high and the pre-market high, because that blue line is the pre-market high. Went long, quickly failed, bailed, got out quick. And I'm glad I got out quick, because if I was patient, this would have been a disaster. What I'm now trying to start to do is also have the other side up. So have some puts up that are a little bit farther out of the money. So if it provides an opportunity, I can flip and take the other side of the trade. Because this ended up being a great 5-minute opening range break, and there was a very nice move there. So there was an opportunity to flip the positions, right? Get on the other side of the trade. I just didn't take it because I didn't want to mess around with it. So moving forward, I'm going to start working on that. But that was, took a loss, and that sucked. But I'm glad, because the loss had a potential to be a lot bigger. And then 1-8, no trades. 1-9. I ended up taking 2 trades that day. So this one was not as clean, but similar looking setup where it pulls in a little bit, slight gap up, pulls in, stops going down, starts to make its way higher, anticipating the break of high day, and pre-market, went long, quickly reversed. I got out. Bailed. This one sucked. This was a pretty big hit just because the options had fluctuated really aggressively, really fast. And I didn't even look at the P&L. It was, I look at the levels on the chart and I get out and I look at the P&L after, and I remember thinking that hurt, but it is what it is. I'd rather get out than be stuck into holding something and kind of build up that bad habit. And then I ended up taking a second trade that day. I took a short on Tesla because that ended up, it kind of started trending all day. So this ended up breaking, right? Making a nice move higher, consolidating, kind of a bear flag. Broke it, ended up going short, and I held this for a little bit longer than I normally do. And when it started to make a new low, I got out. I did miss a little bit of a move, but I got some of the money back, which I was happy about. And then I called it a day, and I stopped trading. And okay, so the 10th. That was a nice trade. I think that was my biggest trade of the month. Yeah. So Tesla. Nice opening range break to the downside. So even though this had gapped up a little bit, I remember, not exactly sure what happened, but I think the previous day showed some weakness, and I had a major level that's not on here now, but I had a red line on my chart just as a daily level or a 30-minute level, and believing that if it broke below it, it was going to continue. So now it was just wait for a pattern on a lower time frame. First candle, red, fails to push higher, and then the moment it rolls over, opening range break. Right? I took this short at right around 480 and got a quick move. And if it kept going, cool. But that's the meat and the potatoes for me. So I take those, I look for the quick moves, and then I'm out. Because every time I try to hold my winners, it just does not, they usually all come back on me. And then the 13th, so I'll just quickly go through these. Tesla, see, this is what my charts look like prior to the open. I think I just got rid of them before because I don't, being that I'm putting new lines on my chart every day, I don't want old ones to be there. But pre-market low, pre-market high, and then a major daily level that I believe if it cracks that, it has room higher. So Tesla, 1 minute candle, rips through pre-market highs. I didn't want to chase it. Second 1 minute candle closes red. Third 1 minute candle starts to make a move higher. This is a 3-bar play. Anticipate the break of high and the major level that I had, and I got a very fast move. Boom, boom, and it was like 2-3 points, very quick. Yes, it could have kept going, but if I catch a 2 or 3 point move very fast, I'm very happy about that, and I take it. I take it. I don't think about it. Traded now, and that was a nice trade. Then the 14th, kind of similar looking chart to a handful of days ago where when I tried to go long and it failed and it broke the low, instead of going long, I waited. So the pre-market highs, 547.50, candles green. Second 1 minute candle closed red. If the third 1 minute candle started to move higher, I would have went long, but it didn't. So it failed to move higher. 1, 2, 3, 4, 5 minute opening range break, right? I took it short and I ended up getting a really fast, like 2.5 point move down. So it moves its way into the gap, especially if the gap is excessive. And that was the 13th. So that was the 14th. So now we'll go to the 15th. Do that really quick. Just got to pull it up. Okay, here's the 15th. Tesla gap down. Yes, it made a new high, kind of a peekaboo new high there, but being that it gapped down, and the previous day closed a little weak, and I had a major daily level, I just waited, right? So just waiting. Had its push, starts to roll over, anticipate the break of low of day, opening range break, and then a very fast move. Take the quick washouts. This is a great example of when I would try to hold a winner. I mean, it's fast, right? 3-4 points really fast, and then instantly bounces back up. So these are sometimes where I would try to hold a winner, and then they bounce right back on me, and I would even let green go to red and then hold it, and just bad habits. Now, when I get that quick move, I take it. Even if it keeps going, I'm okay with it. That was that. So now we'll go to the 16th. No trades on the 16th. Just didn't like any setups. 17th. And this is an opening range break up on a gap down, which I don't do often. But the only reason why I did it on this day is because Tesla had caught momentum the day prior, like it had closed strong. So whenever that happens and we gap down, especially in a bullish, strong buy the dip market, I believe that if an opening range break to the upside sets up, that there's that possibility of that gap fill type of trade, right? So big 1 minute candle, consolidates in the body of that candle, anticipate, go long just before the high of day, and then quickly take the profits into the gap fill and the quick pop over. And it was a fast move. This was like 2.5 points in just a couple minutes. So that was the 17th. And then the 20th was MLK. 21. Gap up, Tesla, big green bar, red bar in between, right? Third bar makes new high, 3-bar play. Very fast, I think it was about a 2 or 3 point move. Take the profits. It did go higher, but those options moved a good amount in just that 2 point move. So that was that trade. Then we have the 22nd, which this was similar setup to looking setup to Tesla just before. BYD caught momentum the day before, closed strong, gaps down. Now we just wait for a setup. 1, 2, 3, 4, 5. Kind of a 5-6 minute opening range break. If this had kept going lower, I wouldn't have touched it. But because it stopped going down, knowing that there was momentum the day before and I thought buyers would step in, break over the high of day for an opening range break, and then fill the gap. And this ripped. This went from 127 to 131. I took profits right around 131 and got a really nice move and made good money. $624 that day. That's amazing. And now we'll go to the 24th, which was Netflix. And Netflix, this is the video I actually put out on my YouTube channel saying that Netflix caught momentum the day before, gapped down into that candle, opening range break to the upside, second day continuation type of play. First few candles closed red. Big, huge candle, right? I took this long at 349, anticipating the break of yesterday's high and knowing that pre-market highs wasn't too far away, thinking that buyers would step in, took the trade, committed to it, and ended up going from 349 to almost 353. So big, big move. And when things are really bullish and hot, I really like that gap down second day continuation type of play, looking for an opening range break to the upside and get the continuation. And the last week, I got chopped up. It was a bunch of little wins and losses here and there, and I'll quickly go over them. But I ended up taking Tesla. The options were expensive this week because Tesla reported earnings. So I didn't take this trade, which is a perfect 3-bar play. Right, big, huge green bar, red 1 minute bar closes in between, break that high, and off we go. But the options were so nasty, I just had to watch it. And that's why eventually I'd like to have shares, because even 50 to 100 shares of that, at least you're a part of it. So, and then I ended up, this failed, and as it worked its way down lower, I ended up taking a short right here, anticipating kind of moving into the gap, potential gap fill. And the moment that it went against me, I just cut it. Not really my style of trading. Not the A-plus setups I look for, so the moment it didn't go my way, I just bailed. And then we have the 29th. 29th, I ended up taking 2 trades. I ended up taking a BYND trade, which this one was just kind of anticipating the break of low of day, right? Huge sell-off in the morning, the bounce, and then as it started to approach the lows, I took it just prior to the low of day, expecting there to be a reaction once it break the lows, and got a small move. The options didn't move a ton. Made $73. Ended up taking Apple too. And this is just an example of kind of later in the day. My trades, I'm not that great. I ended up taking this long at 327. I think there was some pre-market levels or like a pivot high that I was anticipating this to possibly break. Pull back a bit. And the moment it came back up and I got out, I shouldn't even have been a part of this pullback, but it just goes to show that no matter how good you're doing, you still make mistakes. And I got lucky with this. Kind of rode the pullback out. The moment I got my money back, I just bailed. Like, that was stupid. I didn't need to be in it. So take the flat trade and move on. And that was that. And then the 30th, ended up taking Tesla for a little win. And this was actually a nice opening range break, right? First couple candles red, starts to make a move higher. An aggressive entry, it would have been somewhere in there, but even over the high for a nice move. Options were nasty, so I waited. This slowed down a bit, consolidated, caught up to the 8. And then the moment that this kind of broke the flag, I went long. I think I took only 1 contract just because they were spready and expensive. And got a little move, tried to hold my winner. And the moment that it pulled back, right here, I just bailed on it. And just took the win. And then the last day, the Friday, I overtraded a bit and ended up ending the month on a red note, which sucks, but still overall happy with the month in general. Ended up taking Amazon. I ended up taking a later short on Amazon, but this was actually a good opening range break to the downside. But the options on Amazon were so crazy at the morning off the open, I didn't want to touch it. Big red candle, tries to make a move higher, kind of fails the VWAP. Opening range break to the downside for a huge move. I missed it, so I waited for the bounce. Waited for this little channel to set up, and the moment we broke, I took it short, anticipating that maybe there was a move lower, and it starts to make its way into the gap and potential gap fill. The moment it started to go against me, I got out. I only took 1 contract, lost $118. And then I also traded Facebook. This was kind of a later in the day trade, and I just didn't let it work out. But because it was a little later, I don't trade later in the day. So when I do, I'm pretty impatient with letting things work because they can tend to to squeeze against you. So 204.75 was the prior day's lows. And I thought, if we break below that candle, I think there's going to be some people who want to bail on their positions, right? And a reaction created because of the algorithm, possible algorithms and stuff, right? So I took it short right around 205, and it just didn't go right away. Kind of consolidating, made a little peekaboo new low, and I've seen this before where it does a peekaboo new low, double bottom, and then can kind of squeeze back up to that VWAP area. So the moment it went a little higher, I just bailed on it. And of course, it ended up going. But I'd rather just get out with a small loss than, constantly play the game of holding it. And then I also took Tesla that day too off the open of an opening range break high. This is pre-market highs, nice strong move. Bunch of tails showing buyers. The moment we're on our way to make a new high, I went long. Expecting this to go, got a little move here. Was trying to hold out for a bigger one, and then the moment it pulled back, I got out. And that was for a flat trade. So hopefully that made sense, but overall, 65%, winners a lot bigger than my losers. Can't complain. Happy about it. So January 2020, it was a solid month. On not a ton of money, I was able to make a good amount just because of the leverage of options, kind of my knowledge and me being comfortable trading them. If you just start trading options and you don't educate yourself on how to trade them, no matter how much money you have, you'll lose a lot of it. So after all these years, learning, feeling very comfortable with it, feeling very comfortable with my strategy of just trading momentum, focusing on momentum names, right? And then the confidence to just execute. And then when things don't go my way, when a trade, it goes against me pretty quickly, I just cut it. Don't sit there and hold. Don't be patient. Very impatient with my losers. And I take profits relatively quickly too. But when I'm right with these big names, they tend to have massive moves really fast, especially off the open. So that's pretty much it. That's the recap, and I'm just going to stick to exactly what's been working in January and just keep that moving forward. So hopefully this all made sense and the trades make sense. If you have any questions about any one of them or just my trading strategy and style in general, feel free to leave a comment. Hopefully you had a good month, and I'll see you guys later.